All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for Friday night, September 9th, 2022. We'll start with the regression line fractal framework, the long-term hydraulics of this market. Let's see what we got. So this was that about a 40-day low with a COTA 2 a couple times. It penetrated the RL 270. Creating joy among the people. It got about as far across the RL 270 as it had penetrated here. So you're getting a a symmetrical move on either side of the RL 270. So that happens quite a bit. That's not unusual. I think of that as the overshoot. So then the response on that one was that the move up equaled the move back down. And now this time we get about half a move below. So if we cut that in two, we get about half a move below the 270. And now it has come back this week to the 270. So you get that little V bottom looking thing right there. So what we have on the regression lines fractal framework, we have something that looks like this. Nice move, higher lows. We see that the RL 90 has made a turn. The RL 30 bottomed out, so that's one segment, and now it's starting to turn right here. So if we get any kind of move of continuation next week from here that starts moving back towards this peak, what you will see is the RL 30, which is the health of the trend, which looks like this. That's going to roll like this. And that is all about the owl entry right there. When you have the RL 30 turn, and when you have a COTA 2 in the RL 30, that's going to be very strong. That's going to be a very strong move. If we can get that moving next week, that's what it looks like. If you notice the RL 30 through time, you're going to see that thing doesn't really roll over that many times. So here's one. That was an important turning point. Turning point, turning point, turning point, turning point, turning point, starting to turn. All right. Now what I want you to notice is that when you had this peak and then this lower high, this little formation right here, that essentially gives you a pocket to the downside and like a collapsing dragon for that last final burst to the downside. So that's what a K2 to the downside looks like. This bottom, higher low, this gives you this 1, 2, 3. That makes this a COTA 2 to the upside. And then if this breaks out of here, that could really go, and then you would expect to see this come up to, what is that, about 460 in the S&P, and then the previous one was way up here, all-time high, around 483. So that's the little stairway to heaven right there. Is I would say, this move, this move, this move. That's about 4 scoops of potential goodness, provided that we get that turning point from here. So that means next week is going to be really important. Can this little move that got back above the RL, you can get back to the 270, can that continue here? Can it get above the dragon? Can it get above Yeah, right up about in here. That's the next extension. The size of this move is the size of that move. So those are the question marks to the upside. That's the mega move. This is the next momentum move. So it's really important to notice what's going on with the 30. This is just starting to make the turn. The other thing I would tell you is for long term, here was the peak of the 90. This back up in here was a Z3 pinch, this slash super pinch. Super pinch. At the very top of the market, because you had the RL 10, 30, 90, and 270 all in a nice tight cluster. And then what happens out of that super pinch? Well, the 10 starts first, then the 30, and then notice how the 10, is constant. That's the traders constantly finding lower lows in 3 waves. 1, 2, 3. And then you have these lower highs, lower lows, so you get that downward channel. Well, that downward channel features, basically a single move in the RL30 and a single move in the RL270. And then this little bump right here and recovery in the RL10, all that did was make the 90 go sideways. And then it went down once. Now this little bump here in the 10, that just made this slow down a little bit, but then it continued. And here's the turning point now in the 90. So if we look at the behavior of the RL90 here to here, and now compare the difference between the RL270, which is this purple one, right? And the RL90 right here. What you're seeing is just the 90 pulling away from the 270. That whole, and this was the peak excursion between the 270 and the 90. And now that has recovered, and so those two are now in full agreement as to the price. And look where we are right now. There's the 10 and the 270 both agree, and there's the 30 and there's the 90. So guess where we are now? Super pinch, or at least a Z3P. So here's from, if you think of the Z3P as a tight compression of all the 4 regression lines, it's like a little acorn. And from that, big moves happen. And it goes through some kind of life cycle here. In this case, it was all down until you get to when the 90 turns and everything comes back in here. So it's like an acorn produces a tree that grew to the south, and then it creates a new acorn right here. So now this is could it be this, or could it be that? Yes, it could. Either one. But you can see the magnitude of that move. That was a 5-month move. And it has all kind of come back to this level right here. And now, from price to price, if we were to map that out, that's here to here. That's the magnitude of that move. Was that far? About call it 20%, 15% cut off the top. That's what that whole thing looks like. Now, at its worst, it was this, but it's retraced fully 1/3 off that bottom. So there's another one, and there's another one. So the peak of this is the next third up, and then the last third to get back to the previous. So think of this as the trade geometry, and the fact that we are right in a compound critical state right now, where everything you think you know is possible. Not saying that's right or wrong. But notice the amplitude on that move. Wow. You know, those are 15% moves. So this next little move could be very much like that. If we just took the same size of the move, if we took that size of move and said this is where it starts from, it could definitely get to here. It has to get through that price. So I look at this as in the rule of thirds, 1, 2, 3. That's why, to me, the next upward segment is this one, the peak of the RL10 and the Dragon. Right. So what's that mean to the upside then? If we just draw this with some precision, that's 430, and we are right at about 405. So we're talking about another 25 buck move to the upside. So if you wanted to break that, into thirds, you would say if I can manage an $8 risk, then I have a 3R move to the top just on the next not unnatural move. That would not be outrageous move. The second leg of that thing up gets to about 460-ish, 465. That's another plus 30. So that's why I say leg 1, leg 2. Check or hold. This is just basic hydraulics. And the final thing is we're measuring the difference at any moment in that curve. The distance between the RL10 and the RL270 is the difference between long-term buy and hold, what they think of as fair value, right here, and the trader's price. What it's currently trading at is the blue line. So that difference is the difference of opinion based on very aggressive traders and guys who are just trying to hold on to long-term trends. When that RL10 comes back, when it stops failing, if I should say it that way, when it starts making that reversal, that moves farther and faster than the RL270, but the 270 has a trend. So when it meets here, that's the next checkpoint. And notice how it stabilized halfway, pause, 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 and that's where I say you get those 3 legs. And this price here was that price there. So what these guys were aiming for as a return to fair value, it just took that long to get there. Alex says, can the CC state resolve itself to the compound critical state resolve itself to the downside? Oh yeah, for sure. That's, when we're in a compound critical state, remember what a critical state is. It is a moment in which for a small, everything is compressed into that small box. And from here, from that little compound critical state, direction is unknown. And there's an equally strong argument to make for a larger than normal move in either direction with a strong possibility, right? So when we draw hey, what's the breakout to the upside look like if it goes there? I just made the argument that it's either that peak or that peak, so just split the difference and say right there. That's what it looks like if it makes the move to the upside. And then to the downside, I look at this and this and this and say, 1, 2, 3, and say if this thing does start to fail, it could do all of that. And the first checkpoint is at RL10 right there. So downside targets I map to there, to here, to here, and to here. And then if this fails, look out below. Now, if you go back and think and remember what that shock and awe was on that move, it would take that size of a move to break down from here and to go back and test the bottom. But if that did fail, hey, you know what could trigger that? Nukes in Ukraine and Russia. You don't think that's a possibility? Sure it is. So that could happen very easily. In the same way the upside move could happen. This looks like more of a grind just because we're climbing up the steps. But panic and overreactions to the downside happen fast. So it's very important to respect that compound critical state. And so when we're framing this thing, we want to frame it in both directions for that reason. Check or hold. That's what makes the compound critical state so important, is that everything has collapsed to a really tight risk box, and you have the possibility of very large moves in either direction, and we don't know which way it's going to go. So I don't want to have a directional bias because it's a coin flip anyway. But as long as my little risk box here is small, then and my upside move is not unreasonable and large relative to the size of that box, like I can get 1, 2, 3 boxes, or I can get 3 boxes to the downside. I really don't care which way it goes. Everything is compressed to this compound critical state, and it's ready to break. So straddle it and follow the price, and don't stay wrong too long. That is the absolute very essence of what we do. It's just easier to see on this form of the chart with the RL10 being the proxy for price. That's the smoothed price. If you have really good resolution on your monitor, what you would see is this kind of faint gray line in here. This is what price looked like and all of that. It's doing this kind of... So you could get very agitated and nervous with that. So the RL10 is the smooth price. Lets us screen out some of that noise and just look at the signal. And then as smooth as the RL10 is compared to price, now just appreciate how smooth the health of the trend is in the form of the RL30. Those turning points are really crucial now. And it's when those things roll over that the owl begins. That's where the owl signals are happening. The owl signals I'm going to mark in red here to the downside, to the downside, to the downside, to the upside, to the downside, when those rollovers occur, to the upside, to the downside. And that's why this is so interesting, is because the RL30 is coming into the station and getting just about flat. Now, is it going to curl up? Well, we'd have to see some more price follow through to the upside tomorrow. We've had 3 good days of recovery off of this low. That's like a 1, 2, 3 move. But we've got to see that in order to make that RL30 continue to roll to the upside in order to get the owl entry right there. It's got to do some work tomorrow, or Monday, Tuesday, Wednesday. Now, as nice as the 30 is, now appreciate that intermediate signal of the RL90. That thing's as smooth as you want. This little breakdown here, that's like a collapsing dragon on the RL90. You know what else that looks like is, watch where the RL30 crosses the RL90. Here's where it left. So now you can have a downward orientation during that whole move, and then you could have an upward orientation during that move, and it went up and then came back and got flat. And then here, 30 crosses the 90. This is the 30x90 crossover. Now you get this. This was a tell. The 30 came back to the 90 and then didn't break through to come back to the 270, but collapsed. That's when you smash that thing to the downside. And now here's the 30-90 crossover here. So that hasn't happened very many times in the last 6 months. But whenever it has, it's been really, really important. Now, if this one just crossed to the downside, so that warns you that that's a real possibility. But if we get 3 more days next week like we did this week, that 90 is going to roll up, and now suddenly that's going to be a strong signal to the upside. And your target is this and this because of geometry. Those are key price levels that will trigger the emotional response in others. So here's where price is right now. This is your first test to the upside. That's the first leg up, that the tactical trade that we want to get. And then if it breaks through this resistance, now it's going to here, which is another one of those tactical moves. Check or hold. Now, if we got another week or two of generally upward moves, the 30 would look like this. The 10 would look like this, and maybe like that. The 90 would continue to thrive and go up. And then at some point, the final confirmation of all this is that 270 will get flat and then start to move to the upside. And then we're starting to look at the gap between the 10 and the 270 to the upside, between the 270 and the 90, all that kind of stuff. So you can use these 4 regression lines, the 10, 30, 90, and 270, as the fast pair, the slow pair, and the intermediate pair. And then the 10-270 mix is the regression line fractal framework, where we're looking at the difference between the 10 and the 270. Say that's how strong the traders were moving it away from fair value. And once it starts to reverse, if it moves an ATR off that bottom, we can say 1, 2, 3, 4. That's a 4-to-1 move, of which you end up getting 3, because while this is moving up, the 270 is decaying and it meets here in the middle. And now that's the question. Are we going to get that next week, or is it going to collapse here? Both are equally likely. It's an absolute coin flip. Don't interpret anything I'm saying as other than perfect critical state for traders to follow the price in the direction of the big decisive move. You don't have to be right. You just can't stay wrong too long. You should not have the courage of your convictions of a directional move. You should have courage in saying, yeah, there's a real good chance now more than ever for a large directional move, direction unknown. This is a trader's market. Boy, is this a trader's market. All right, that's what I want to say about the regression line fractal framework. Check or hold. The essence of this is hybrid trading. You guys just heard a lesson on hybrid trading right there. So if you're a longer term swing trader, like Brother Ernie out there, the RLFF can help you deal with the daily noise. And you can pick which one of those pairs makes the most sense. Like to me, the 30x90 pair, informed by the 270 as sort of the target, that those crossovers aiming back towards the 270 are crucial. So an extreme movement on the 10 alerts you that there's a large swing move possible. Or the very absence of a difference. Like when this comes back into the station, this is what happened the last time the 10 and the 270 came together. In this case, it was a huge move down. So could this reverse and be a huge move down? Well, yes, it could. Could it get to here? Yes, it could. So enough of that, beating that into submission. So now when I put the sniper lens on this, now I'm going to start calibrating these moves with my carpenter's square, right? And I'm looking at the 150-day look back. That's this square. There's the corners of it, right? And again, we're just going to think of that in terms of the top of that is 100 and the bottom of this is 0. So the midpoint is somewhere around the 50-yard line. And the midpoint, between 50 and 60 is somewhere in here. And the overbought piece is the top 10% and the bottom 10%. So this is the vast no man's land in between the fence sitters and the overbought and the oversold. So where we are right now with this nice little move today is back almost to the 50-yard line and stuck in the middle. And we've got some clearly marked out 30-day high. And here's the 30-day box. 30-day high, 30-day low, and it's kind of right in the middle, and there's that critical state. What's it going to do? I don't know. Yeah, this could be a nice move up to the top. Sure could. That would not be surprising. And then a move to the 30-day low. Could that happen? Sure it could. That would not be surprising. So I don't know what's going to happen out of this, but I know that the size of that box is small compared to the size of the upward moves and the downward move. And I know that if this breaks, each of these now become checkpoints to the downside for further targeting, and then targeting to the upside. All of these purple lines represent previous support and resistance periods back here that were significant. So price remembers what happened. Market remembers. People remember what happened at certain prices. They get emotional connections to those points. So when I'm looking at the 30-day box, and now I have these 30-day, 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 those 5 chunks of 30-day moves, and I can kind of feel where we are in this. There's the big down move, there's the bottom, there's the retracement, and then back into the middle. That's why this is so interesting. It can get to here or here, and then the next breakdown is to here. We're about 16% off the top. So we've come up, 14% off the bottom. So this feels like greed is beginning to enter the picture too, right? Enough of that. I feel like I'm overkilling it. So now this is the 30-day look back. And there's the peak of the RL10. Now I want you to notice how important on this tactical time frame the RL10 rolls over right here, and it crosses the baby dragon right there. So here's where it crossed on the upside. So you have this nice little upward move until it can't go any further, and there's your aha. And then notice that is a downward trend in spite of this little peak. That RL10 baby dragon relationship holds until it goes to here. So that's a pretty nice little early warning for more tactical trading. And then you can feel the importance of the PSAR. Look how that shifts. Like, here's the first warning. Here's the second warning. And both of those come in time to prepare you for that, to either exploit or protect you against it. Now, on the upside, that PSAR is still pointing down. It takes this RL10 to continue to go north while the PSAR is coming down. So we're about 1 day away from the PSAR flip happening. And then that PSAR, when it flips, it prints where the peak of the RL10 was because of math. So when that PSAR flips, it's going to hit right there, which makes about 385 as the crucial price level that would trigger a return to the bear. That would be the collapsing dragon move. So this is actually your little buffer. Meanwhile, this was our WMB3 entry right here. This was our 1, 2, 3 entry. This was a continuation and a takeout of the PSAR. So that was a legit entry point. So there were 3 places where at various degrees of aggressiveness on a daily chart you could get long. Now, you can also see that happening on a daily and then drill down to an hourly or a 30-minute and play that move, which is why the next chart we look at is the 30-minute chart. And this move was entirely tradable just using the slow 30-minute chart. That PSAR flip was tradable, as was this PSAR flip was tradable. And this one is the crusher and continues because there's a kata too. So that's one fast swing trade or slow day trade. And I want you to notice how the PSAR keeps you in that trade, because the PSAR doesn't flip until the RL10 crosses through. Now here it got close. And if you got out there, I'm not offended, as long as you get back in right here, because it did not fail. It resumed. So you've got to trust the PSAR. Even when you hear the wood creaking, that's the resumption of the move right there. Now this is nice because it has eclipsed this support level, or that resistance level. So now the next move is up to here, which is where this cracked, and to here, which is where that cracked. So that's the next pathway up to about 418 and 420, which is the 10-day high. So lots of potential in both directions. And this is far enough that if that PSAR cracked at 405, and then if that cracked at 398, your target is down to 390, and that's a $20 move. That's nothing to sneeze at. With about if you put if this breaks out with a $4 risk, or this breaks down with a $4 risk, you got a 5-to-1 trade to come back to here. Don't turn up your nose at 5-to-1. So lots of good things happening in that market for traders. Let me know in chat if that was helpful. Feels like it was. All right. All right, let's look at our sector performance now. The girls are home. The dogs are happy. So the S&P was up 1.55 today. Emerging markets lagged at 1.48. That's not much of a lag. Diamonds lagged a little at 1.27. Not much of a lag. Treasuries were the worst, but even they were up 0.22, but they remain under 110, still vulnerable. The better ones were the two U.S. speculative aggressive ones. That was the Qs at 2.2 and the Russell at 2.01. So this is symptomatic of a risk on kind of a move. And now we see that a tech, we said that yesterday, the last 2 days, tech had lagged, and we said, if we see the market up tomorrow and tech is better, that could really be a heck of a move. Go back and listen to the tape, and tech happened today, and energy happened. The two sectors that had been lagging. I mean, here was the thing: the market was going up for 2 days, and the two leaders, XLE and XLK, both had been going down, but the market was going up. And we said, hey, if tomorrow the market is going up, but now tech and energy join, that could really be a nice big move. Bam. That's what happens when those reverse. So you get paid for paying attention to little things like that. All right, let's take a look at the sectors that underperformed. There's our baseline. So you got materials, VXX, commercial real estate 1.2, staples, residential real estate, finance, biotech, uranium, Aussie dollar, individual companies that suffered, Devon Energy and PayPal. Now that's the anomaly. Devon had been up strong while energy was down. But energy reversed, but Devon Energy basically just marked time or held flat. So this is like the energy sector catching up to Devon, which was already fully valued. Then you got Texas Instruments recovering a little bit. That's not bad. That's a small, narrow sector of things that underperformed. So you had broad participation otherwise in the upside. So let's look at that. Alrighty. So here's the S&P. Again, the baseline at 1.5. So you have Mexico, clean energy, agriculture, 2067. Always when it's above 20, I'm happy. XLY for consumer discretionary, wheat and precious metals, tech, arc genomics, lumber, the other lumber, energy, lithium, fangs, Oil exploration, now we're up to 2.76. Marijuana, uh, blended commodities, Brazil 3.25. Oil 4.4. Arc innovation 4.5. Ethereum 6.2. Now individual companies, and so you get Bitcoin and Coinbase 10%, Ethereum 6.2, Robinhood, yeah. Now, the ones I like, my boys, Alcoa and Cliff 7.7 and 6.2, and U.S. Steel 3.8. There's my metals. There's my boys. Now let's look at the semiconductors and see how they compare to tech. So you've got NVIDIA, you got Intel, and you had Texas Instruments down here. So there's my semis. So NVIDIA and Intel were both better than the Qs and S&P Tech. So that's a plus for those going into the moves next week, whereas Texas Instruments is lagging a little bit. So now what I'm trying to do is get that market, sector, company target to see what those relationships are in my logic chain, so I can carry that forward next week for this comparative analysis to look for who the leaders are in this next little surge. So it feels like metals and semi and tech. Check or hold? All right, let's look at, let's clean up today's work, and then we'll go into the reports for the weekend. All right, here's some sniper trades. So this was, let's see here. This is U.S. Steel on 3 minutes. So there's the opening range 3. I was tempted, but I had some other things going on. I saw this, and start to recover. So I buy it in the pocket before it breaks out. Standard risk box. The PSAR is with me all the way. So I'm hoping to see it break above this. So that's my little tactical trade in here. Scratch or fractional loss at the PSAR. Now I feel stupid for not taking the short, but today was such an up day. I was looking at long only, so just simplifying my life and trading the side of the pattern that I want. I'll let the other guys have that. So now I'm looking at the low and then the higher low. This feels like a SSC, but if I take into account yesterday's low in the gap, you could think of that as a K2. This is more like an SSC to me. Standard risk. I'm looking to see it get above. So here's my tactical trade. This is where I want to start adding positions if it gets north of that. Another 1 hour loss. So don't have to be right, just can't stay wrong too long. So I guess that's about half an hour. Caught a 2. So this is U.S. Steel. When do I give up on U.S. Steel? Never. Because U.S. Steel. So there's my risk box. So we're down about 0.7 right now. a little fractional here and half an R there. I missed the second entry. This was span of control. But if you were going to put a second entry, when you see this and it holds, there's your second entry. So that one is 1, 1, 2, 3. So plus 3 and minus 1. So we're about net plus 2 right now. They all look the same leaving the station. And I'm only interested in the upside, nothing much happening there. So U.S. Steel for about 2. Next one, Brazil. There's your OR3. There's your breakout to the upside. There's your standard risk box. Standard exit for plus 2. Kata 2 re-entry. Scratch. Stalling. So plus 2 in Brazil. Tesla. OR3. Breakout. Standard risk. Plus 1. Kata 2 re-entry, standard risk. Fractional, then an immediate re-entry when it didn't fail. Fractional. Starting to bore me. Come on. Kata 2. Plus 1. So that's about 2 in Tesla. A lot of that was the gap up, and then it maintained that support level. So this is something that feels like Tesla to the upside. Tesla to the rescue. Already did U.S. Steel, sorry. Cliff. So here's some OR3 for us. It feels like it wants to go because there's a gap up and the PSAR is pushing from the bottom. Let's go, boys. Let's go. Okay, there's a Kata 2. Standard risk. That's almost like failure to fail. And quick loss. Kata 2. Quick loss. Big gains. 1, 2, 3. That looks a lot like U.S. Steel. Yeah, all the metals did that today. You know, what am I giving up on the downside? Because I'm playing the long side, I'm not getting that trade, which would be a normal one. And that one, okay, cut the loss. It gets better. Get paid. Here was a second entry I missed. Span of control issue. already did Tesla, sorry. Yeah, we just did Cliff, sorry. Oh, somehow I got back on that U.S. Steel. Sorry. Oh, so here's Cliff. I'm sorry. Yeah, I think I accidentally jumped the... So there's the OR3. Here was the Kata 2 effort quick cut. Kata 2. Yeah, that's Cliff. There it is. So that one actually worked better than U.S. That had less volatility than U.S. Steel. So there's the unit of risk. And that's 1, 2, 3. Minus 0.5. So we're at about plus 2.5. Here's another Kata 2 entry. Grinding. And closed pretty nicely for another 2. I was fully expecting this thing to fail in here, but it didn't, and it gave me 2 more. So that's 4.5. And Cliff. Oh, I already did Cliff, sorry. All right, so... All right, I'm going to jump over to see our traders today, and then we'll go ahead and do the regular reports. Yeah, here's one. I think this was Woj. So Woj, it's okay to trade some of these. You don't have to just watch them. So he was looking at the Luna coin. This little segment right here. You know, when you take this area and enlarge it, it looks like this. Hey, this move here out of the PSAR flip, where you get that, that's only this move. So if this is the R10, that move there was 1, 2, 3, 4, 5. That moves to plus 277. And that's not counting you should get this second position here and a third position there. So that might have been a 400R move somewhere in there, plus or minus. This stuff is fractal and robust. Just let that one sink in for a while. Finding the movers is what comes to mind. All right, quick look here at Tim. Gets paid, good scratch. Off desk. Gets paid. And then got a little choppy in here and gave a lot of it back. So for -2. Yeah, lost 3.3 quickly in the chop. That's going to happen sometimes. Be mindful of where you are during the day and what your daily psychology is. But I don't mind you continuing to keep taking those shots. And part of that is that where Tim is. I asked him yesterday to take a quick look at since coming back from holiday. He's got a very stable production. The last 50 trades have kind of flattened, but still, that's nothing to sneeze at in a month. 184 trades. The best is 4.8, worst is 1. His win rate is 53 to 28. That's darn near 2 to 1. And his payoff, 0.75 to 0.53, is 3 to 2. So that's 6 to 2 or 3 to 1. That's pretty good shooting. And looking at his R distributions on the histogram, nothing worse than -1, And he's trimming that down so even between the point greater than 0.5 is less than half of his losses. So half of his losses are between 0.5 and 0. And then a normal looking distribution out to 2R. And this is positive expectancy. And he's got large right tail. That's what we want. And that's what you get. 4.3 system quality number. So take today in stride, but recognize maybe that that run is over, or is getting ready for the next big move. All right, Agnieszka. All right, so this was her first entry. So make that one red, because that's a short. So that was a quick loss. The stop and reverse entry should be here, where the PSAR flip is. She got it here instead. So she makes +1 versus the -0.4. That's good. I think there's a second entry here, because it gave you that little R10 wiggle. Let's take a close look at that. Here's your R10. That's where you can enter here, and now you get paid that R, and then that could even be a second position. So that's the opportunity. That's why you want to respect that little R10 wiggle. Great exit. Here's the PSAR flip short. She missed. That's one. Here's a PSAR flip to the upside. Got in the chop a little bit here. Still positive on the DAX during a choppy day, and we had more to make in here, but still did pretty nice job. I'm very pleased with the quick reversal, and just take a look at how to exploit that PSAR flip, especially in the early stages when you got this sideways chop going on. So that failure to go this way quickly reverses. You don't have to wait for it to get all the way up here. Like, that's just a fake one, go two. You don't have to let it get that far out. And then hit that one right there. Woj got in the chop. Not gonna overthink this one. This just got a little bit choppy in here. -1.7. Got well paid on Tesla to overcome that. And then Devon and Tesla. Oh no, I'm sure we just have that one. Is that the same one? Oh, I opened it twice. Sorry about that. So, yeah, and then the Luna trade. So, I think that was everything that was in there. Yeah, that's the same chart. Okay, so that's everything we got for the traders. Now let's go look at the daily report, or the weekend reports, I should say. Thought we were almost done there. I forgot we had the reports. Darn. Alrighty, weekend reports first. Bearish normal, signs of improvement, still risk off, be careful. Sharp moves in either direction. That's the compound critical state. There was enough improvement that ETF2's model increased exposure up to 50%. We went through this one excruciatingly. So right to the BMRs. Half are on a buy. That's all the U.S. plus Latin America. With real estate, the defensive play back in the optimal position. ETF 22 adds the XL series, so you get utilities, discretionary, healthcare, and staples all run, and even industrials all running to the top against. So this is instructive. So when you get big broad indexes, you get smoother averages. So if the market is kind of going up, and you have S&P right in the middle, these big fat other indexes, some are better, some are a little worse, but there's a pretty tight spread around that because they're all so broad. When you add the XL series, you start getting sector outperformance, and then you get, like those four are giving you more, so you're starting to see performance above the big broad indexes. So the ETF 13 portfolio gives you a tighter spread, a little more conservative and less volatile. When you go to 22 and 32, you start getting wider performance on either side of the distribution. So in this case, you can see you got things like 4.8% in consumer discretionary, right? And then when you go to ETF 32, you now add a bunch of other broader or country indexes and sector indexes. Now suddenly, you get things like clean energy gets inserted in there, and then on the downside, you get other things that are just, so you get opportunities in both directions that are wider. So think of that as ETF 13 gives you a tight spread, less runaways. ETF 22 gives you that next wider spread, and then 32 gives you even wider. So you're just adding volatility, but you're adding some choices. This Brazil and Latin America in the middle of the table are really starting to show some strength. This is the metals coming out of the hole. So that's why I think there's more room in them to the upside. When you see MDY, the U.S. mid caps, so they're large enough to be able to accept a lot of money. So if you're a big fund and you got to put money, you can buy them. That's usually a sign of increasing confidence in an index that tracks the S&P but is a little more volatile. So it's up 3.6 when the S&P was up 2.5. When the S&P lost 3, it only lost 2.2. So that's actually not bad. So that's that kind of peeking under the hood there in the U.S. market. We're seeing some stealth strength. In the Dow, some value plays in here, and old reliables like Walmart, safety and retail, Goldman and Boeing, Disney, Home Depot. Let me look at the world market model. U.S. looking pretty strong relative to commodities, Asia, and Europe. So it's all U.S. right now. Staples, utilities, and healthcare, the defensive plays. But I actually like the fact that now there's room for tech to make a run. So I think that's the scenario for the upside. You got the S&P outperforming EFA. That's all good. Here's a shift in some leadership right now. So you got discretionary is green and white. You got mid-cap growth, Russell growth, small cap growth. So all of these green and whites was good, now great, exploit new strength, and you can turbo them intraday because they're the new leaders. That's good stuff. Find the movers. Now looking at the liquid ETFs, looking at ATR percentage, it's energy, biotech, oil exploration, semiconductors, gold miners. Those are the liquid tradables. All right, going to the daily. What in the world? Oh, there we go. Sorry. Strange. Sorry, let me get that sized right. All right, we've seen that one. What is going on here? Why did that not print? I'm going to have to print and upload that again for you. Let me see if I can open it real quick. That's odd. I have not seen that happen before. No rest for the wicked. No breakouts in the Dow, no breakouts in the ETFs, just a nice rebound. Plenty of auto framers, as you can see in the auto framer report. I like Intel, 3M, and tech sector. They're all near the top with great reward to risk ratios. A handful of squeezes. There's Walmart, Intel, and oil or finance all look good. No Godzillas in the S&P because of the nice 3-day move we've had. All the Godzillas paid off. VIX and Treasuries in the tactical set. Plenty to choose from in the fireworks and the fence sitters. The volatiles there at the top that are volatile on 5-day and 1-day would be on my short list to frame. We'll probably see some of those tomorrow. And you've seen the stats and the sniper stats. This is a measure in the NDX of all the great strength that there was across the board today. Plenty to choose from. There's our nice little 3-day move off that bottom, and now it's up into a critical state. Does it recover, or does it pause? And I've made the case for that already. All right, that's everything I want to cover tonight. I will get this reprinted and posted for you in on Patreon. We'll get that resent. I had it printed in just a few minutes before. I didn't realize that some of those pages didn't print. So that's weird. All right, that's everything I got for you. We'll get this recorded for you tonight. Okay?